So in this video, I'm gonna talk about the charts. We're gonna drill in on the technicals on different market crashes. How long did it take for the markets to recover in the 1997 crash, the 2008 crash, to where we are today? What are the underlying conditions for the markets today to do better and to recover? If you want to know more about that and you want to position well in this era, because I really believe this, in this time of crisis, in this time of new realities, in this time where everyone's scared, those that know what they're getting into, those that have a plan, those who follow the charts to the very letter will win. So if you want to know more about winning in market crashes, then you have to check this video out. Hi everyone, hope you guys are good and well. We're in for another deep dive, analyzing the markets, analyzing how things would crash to give you as much value and content as possible. So if you guys are ready, you guys are excited, comment deep dive. So for today's podcast, what I want to share to all of you in light of what's current, in light of what's possibly going on is number one, the technicals of market crashes. We're gonna look at the charts. We're gonna have a deep dive. We're gonna see the peaks, the bottoms, and what caused them to start to reverse. We're gonna look at how long did it take, what were the triggers, and how big were the gains. Because sometimes also the road for us to be able to decide on the present is looking at what the past is telling us. And that's the whole context of technicals. Technicals is past prices plotted into charts to help you make the right decision today, to help you to position. And I'll say this over and over. It doesn't mean that there's a crisis. It doesn't mean that it's too hard, it's too scary. It doesn't mean that whatever you see going on, it doesn't mean you can't profit from it. It doesn't mean that it can position you for the better, because as what I've mentioned in point number two, we're gonna look at the market recoveries. And I've been saying this all the time. I've been saying this over and over and over and over. If recessions happen, then recoveries do too. And after doing the nitty gritty of the charts, we're gonna analyze it and I'm gonna share bits and pieces of my strategy towards everything. Before we begin, my name's Marvin Germo. I'm a stock market trader, investor, and I do daily videos about investing, about trading on in the markets, and I just have one heart and one goal on why I do this. I just want to give as much value to you guys as possible to help you decide on what works for you as an investment, as either if you're a trader or an investor. And I just really want you guys to win. So if you're new to this, and you want stuff like this, like, share, subscribe. And if you guys have any other question that will arise from this, put it in the comment section below and I'm going to make as much videos for you as possible. Or if it's a very, very, very uh, private question, you can just go to my Instagram and slide a DM there. And for sure, I try to answer as much of your questions as possible, but there's just a lot. So I just want to give you guys also the time, because you guys deserve the best. Filipinos deserve also being financially free. I'd also like to mention that all of the stocks by request videos will be in my second channel. It's relatively new. There's not much videos yet there. It's called Marvin Gerbo Podcast. But for those who want the stocks by request videos, they're all there. The last videos that I posted were about Mary Mart, URC, JFC, CNPF, Pure Gold, Wilcon, etc. They're all there. So appreciate it. That would give a second channel. It's called Marvin Germo Podcast. Now, this whole video that I'm doing is under the context that a couple of days ago, the economy shrunk by 16.5%, placing us in a recession. And this is not something that's rosy and this is not something that's good. But what I want to show you is how to respond in times of crisis. How do you position as a stock market trader and investor? Because at the end of the day, for those who don't know my story, I started investing. Uh, I hit the crash in 2008 very, very well. And it allowed me also to build the skills that I need, not just the skills, but the acumen and the experience also to be able to navigate the markets right now. Now that even when we are in a very, very uncertain time, I'm not scared. Why? Because I've seen it happen over and over and over. And I want you guys to uh, learn this with me. And this is something that this is a timeless content. You can go back to this video at any point in time in the future, and the information here will be very, very relevant to you all. Now, these are the three crashes that we've seen over the past 3 years. These are the past three crashes over the past 20 plus years. And if you look at it, they're all pretty much different. The context of that are all different. In 1997, we had the Asian financial crisis where the Thai baht fell, there was a property bubble. Then a decade after that, 11 years after that, you had the global financial crisis, the global financial recession, where uh, there were a lot of derivatives. There was a crash also, but everyone placed their money in derivatives, and those derivatives, when they started to pop, and it was so leveraged, and a lot of financial institutions and countries invested in them, that caused the large drop in 2008. If you notice it, the 1997 crash to the 2008 crash that brought our markets down are all totally different. And right now, 2020, we have the coronavirus right smack in the middle of all of this, right smack in the middle of all that's going on. And if you notice also the difference, and we've had so many videos about this, this one cuts to the core of our consumption driven economy. Unlike 2008, unlike 1997, 2008, people still went to Jollibee to eat. People still went to malls, in SM malls, to be able to shop. Right now, all of that, all of what made our economy strong, remittances also included there, are basically hit. Now, that being said, this is the charts from 25 years stretch from today to almost 25 years in the making. So this is how the charts would look like. So if I try to plot certain points here, and I hope that you guys get this, for those who are not into technicals, this is basically a line chart. Most of the time when I analyze my charts, I'd use a candlestick chart, but the day-to-day movement for this video is not really as important because we're looking at it from longer periods of time. Now, if you look at the left part of this chart, you will see right here where I'm placing a circle. This is the 1997 Asian financial crisis. In the 1997 Asian financial crisis, as what I've mentioned, you saw majority of the economies in Asia got hit, and you saw a lot of banks also, and you saw a lot of property developments in the Philippines. Uh, they were basically one of the biggest and most affected industries and sectors in that time. Anyways, at that point in time, the PSEI was at the 3,422 level. If you notice it, and you look at the left part also, the 3,422 level is relatively higher already than the previous areas. As you all know, when Ramos became president, we were dubbed as a tiger economy of Asia, and then we started to zoom. That was right after Cory became president, and we got freed from martial law, and suddenly the economy also started to open up. But as the 1997 crisis hit, uh, we saw the markets already start to fall down. We saw it start to move down. So if you look at it and you fast forward to where we are currently, that's where we are also, a period of recession, a period of uncertainty. So if you are older than me, you're most likely in your 40s or your 50s right now. You at that time, 1997, I was only 14 years old. I was still a teenager. The economic effects, the business effects, I would only hear it when old people would talk about it. I would only hear it also in the radio, see it in the news. But those who are older saw the larger effects of it. Right now, yung naabutan ko talaga na ako mismo nag-work, nag-invest na, was the 2008 crash. But as that started to happen, the drop from the 1997 crisis to, brought the markets to kneel down at 68.61%. Comment below if you're learning, comment if this is helping you. So after the drop of 68.61%, what basically happened is, from 1997, it took 6 plus years before the market hit a bottom. I'll repeat that. After the market hit its high, kumbaga in our era, that's the 2018 all-time high. After it hit its all-time high in 1997, the recession happened. Then markets started to cross massively down and go into a large downtrend. And as it went into a large downtrend, it was it took 6 years until it hit the bottom. The bottom at that point in time was 1074. I'm not saying as early as now that it will take 6 years before we hit the bottom, but what I'm saying is it took that era, that crash, that crisis 6 years before it hit the bottom. Now let's continue. Then, after hitting the bottom, the market started to go up again. Remember what I said, recessions are cyclical, and in the same way, recoveries are too. Now, let's continue. After it started to recover, the market went up to 3759. Please remember, when I started all of this, it was a 3422 at 1997. Then it hit its peak at 3759, somewhere around the 2007 area. So why am I saying this? For from its previous peak to hit another peak again, it took almost a decade from peak to another peak. And as it started to go up again from the entire bottom, the gain was 250%, but it took 4 years from the bottom to the peak. So let me repeat what I said so you get to digest it. From the 1997 Asian financial crisis, before it started to go down, to the before the crash of 2008 happened, it took more than 11 years before it hit the peak again. But aside from that, it took a longer period of time also before it hit the bottom. And then after it started to rally, it went up to 50% and it took 4 years until its peak. So just to show you, it takes some time. So why am I saying this? While we're making this video, we don't have a clue also how long this will be. We're still not yet out of the crisis. As of this video, we're still in a recession. So, economically speaking, we're still not yet out. All of the bad news have not been factored out. All of the businesses have not figured out yet a way to get out of this. So, but let's continue. Then after that, the 2008 financial crash happened and we saw the market start to go down again. So what I wanted to show, no, as of this point in the chart, is there's a stark difference. The market here dropped 52.6% massively, and because there was also a lot of fear in it. Remember, please take note of this. The larger the fear, the larger the uncertainty, sometimes the faster the drop will be. That being said, because it was so fast, from the highest point to the lowest point, it only took 1 year. As it took a year to go down, the lowest point of the PSEI was 1,782. I repeat, from the highest point here, when the at 3759, the 2008 crash happened, large downtrend, 52.6%. It was just a 1 year drop. Then it hit 1782. Right after that, the market started to bottom. And as it started to bottom, we saw the market go up again. But this is what made it so interesting. With all of the money that the US government was pumping in, all of the quantitative easing, zero interest rates, and then real economic activity also happening throughout the world, we saw one of the longest, most massive bull runs in our entire history. And please remember, this is something that happened not just in the Philippines, but it happened everywhere else around the world. I really believe it's something interesting. That's something uh, so specific to note, that the long uptrend, the long massive economic recovery Everyone always thinks that when the economy is good, the show will last forever. But that's not the case, eh? And we're seeing right here, right now, the full effects of it. Anyways, this entire large, massive bull run caused the markets to go up over 408%. As the market started to go up over 408%, here's the entire bull run cost was around 10 years, measuring it from the lowest area, 2008, to the highest area, which we should call the peak of 2018. I want you guys to take note of this, that when we started to drop massively last March, we weren't already at the highest point. Eh. I repeat, when we dropped last March, the market wasn't already at its highest point. We weren't even above the 8,000 level. The highest portion of the market was around 9,000. That was around January 2018. I remember it so vividly. You can backtrack the videos. I talked about all-time high, and we were in Iceland at that time. I was literally watching, trading the markets, monitoring the markets early morning in Iceland at that time. That's why it was so memorable. End of January 2018, markets hit all-time high, 9,000. Fast forward a few months later, we started to go down. And as we started to go down, we've never gone really back to where we were before. Then the drop, because of the coronavirus, just accelerated it. But I want to point out that the largest and the highest portion that we've ever been was 9,000 2018. That being said, this is how the trend line is currently forming. For those who read my books, for those who attended our seminars, and for those who watched our videos here in the channel, this is the trend line that we should respect. That the only time we get out of the downtrend is when this trend line is broken. And if there's one thing that I'd like to point out, as you can see, that's very, very consistent from the crash of 97 and the crash of 2008, up until the trend line is broken, you can't really expect the market to start to get better, to start to reverse, to start to push up. That being said, from the highest peak of 2018 to where we are now, we are still currently at the 2 year mark. And at the lowest that we've hit in uh, after the coronavirus and the lockdown was mentioned, we dropped from the highest point to the lowest closing price at 48.96. If you put the intraday drop of 4,000, then it would have been much worse. So from 9,000 to around 4,600, we've dropped 48.96%. So currently, while I'm making this video, the PSEI has started to rebound from the lows, but it still hasn't shown any change in trend and direction at 5,846. And all of the economic news have spoken that the Philippines is still currently at a recession. Are you guys learning? Is this helping you? Appreciate it if you can press the like button for the YouTube algorithm to make this video shown to more and more Filipinos. Anyways, I want to talk about the road to recovery. Analyzing it from the past prices. And is it interesting? Sarap din magtingin ng charts, no? Sarap din just to analyze the numbers at its purity. And it's nice that we do this when the market is closed because there's no emotions, there's no hype, there's no speculation. Because you know me, the reason why I can trade with confidence is because everything is based on my financial plan. Everything is based on the amount of capital that I deploy. Everything is based on what I see from the charts and what I see from the fundamentals. I don't have to look at anything else. Eh. That's why I've been hammering it over and over and over and over. You want to be successful in stock trading, you want to be successful in stock investing, build your skill. What you do on your weekend will determine how good you will be later on. It's never about get rich quick. It's never about wala ka na kailangan gawin para yumaman. It's never about trying to do the shortcut. It's always the hard things that will make you rich. It's always doing the things that people don't want to do that will make you rich. Anyways, as what I said earlier, for us to recover, we must break out from that downtrend. And as of now, while I'm making this video, the trend is still not broken. And aside from that, comparing us from the other crashes, the crash that we are experiencing right now is already longer than the large dip of 2008, but it's still a bit shorter from the 1997 crash. You have to remember, I forgot to mention this, that last year the markets were not going up and it was already lower than the 2018 peak. For one reason, there were a lot of issues already in 2018. I don't know if you remember this, but people were talking about the high inflation because of the train law that got passed, and it made a lot of the profitabilities of some companies are relatively lower than 2019. The trade war was at its height. Then it was the coronavirus that tipped everything, pushed everything down, bringing economies to their knees. Anyways, if you also noticed it, what I want to point out is the crashes from 97 to 2008 were different. The causes were different. The dips were different. The recovery times were different as well. And it also means that what we're going to see right now, 2020, may look different from how it was in 97, may look different from how it is in 2008. That's why it's nice to listen to a lot of data, but in my opinion, I don't really look at forecasts because no one has a crystal ball. Eh. No one can predict, project, forecast consistently for the very letter, to the very letter how markets will go. So be wary when people make a forecast. Oh, the market will hit this by this time. No one can know that. No one, even Warren Buffett doesn't know. Even Peter Lynch, Ray Dalio, people that I follow that have crushed it and are so good, don't even know. Now, as what I've mentioned, the drops comparing 97, 2008, and today are all different. The gains from 97, 2008 are also different. So you can't really compare eras, but what you can do and what will help you make money, and that's the whole crux of majority of what we've been talking about, is just about knowing the trend, because the whole narrative, the whole goal of this is never to pick where the lowest portion is, but the whole narrative is to come in when the trend is broken, when the stock or when the market is out of the downtrend already. Your knowledge of knowing what the trend is, plus your knowledge of deploying capital once you see it start to reverse, is what's very, very important. And to add more flavor to it, it's knowing the fundamentals, the underlying fundamentals that will cause markets to reverse, that will cause markets to reverse, is very, very important also, because you need to know, does the reversal have legs, or is it just price action? Is there really something causing investors, both local and foreign, to come in? Is What's the risk right now? Are the risks lesser or is it bigger? What are you seeing? So for me, I'll always say this: it's never about speculation. It's never about trying to guess. Don't trade, don't invest based on things that you can't see. Trade and invest based on the numbers, trade and invest based on the charts, trade and invest based on the underlying principles that are tried and tested. So what I want to say about that is basically this, and I'll say this over and over. In times like this, now is not the time to be scared. Because if recessions happen, market crashes happen, recoveries do too. And if you want to see a great transfer of wealth, while there's blood in the streets, while people are scared, and you have a plan, you have a buy parameter, you have a sell parameter using technicals and fundamentals, go do it and go execute on it and try to win. So, did you guys learn a lot today? I hope you did. If you guys learned a lot, I'd appreciate it if you could put it in the comment section what's the biggest thing that you've learned. And I want to know also, did you stay up until the end? Comment I stayed up until the end if you did. And comment I'm learning if you're also learning. If you don't have any questions, just say I'm learning. But if you have questions, feel free to put it in the comment section and I'll try to answer it. Again, if you have a personal question, slide the DM over Instagram. So there. I hope this is something that helped you. I hope this is something that gave you as much content and value as possible. Because at the end of the day, that's all I want. I want you guys to win, and I want you guys to get as much value from all of this as possible. So, links are down below if you want to know more about technicals and fundamentals. I have different playlists in YouTube about it. I also have 5 books. The link is in the description below for those who want to know more about it and those who want to attend my online courses with Chinkee Tan and Sean Si. The link is also in the description below. And aside from that, for those who want to invest in US markets, you can buy US stocks using eToro. Link is in the description. $50 only. It allows you to buy Facebook stock already. So there. I hope you guys got a lot from this, and I hope this gave you a lot of content right here, right now. And I know for a lot, I've been getting a lot of questions that it feels a bit scary at this time. Rightly so, because every time there's uncertainty, every time that we are in an era where we don't know what's going on, imagination of the worst that could happen could take place. But the way I do it is that's why I try to focus on the things that I can control. I can control how much buffer I have in terms of savings, that if the worst happens, I will be able to still be afloat. But above and beyond that, I control how I invest, I control how I generate cash. And that's what you can do. Try to be as productive in this era as possible, because the more productive you are, the more kung pagod ka, kung busy ka, kung nagbe-build ka ng skill, you won't have the time to worry. So if you're worrying, what I normally do is I just try to shift my attention to something that will allow me to just do even better and to hustle even more. So there, I just really genuinely want this time and this era to be a time where you guys just continually win, because we need more and more people that are good like you. All 133,000 subscribers of you. 133 na nga pala tayo, guys. Thank you so much to everyone who subscribed. But all 133,000 of you to benefit and do well. And in the same way, those who are in Facebook also, all 135,000 of you to win. So that's it for now. I hope you guys got a lot from this. This is Marvin Gurmo, and I hope this video helps you. Trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.